All right, ladies and gentlemen, welcome back to the Bitcoin podcast here on Moonduck. This is episode number 4, and we've got some exciting stuff to talk about once again today. I'm Zyori, he's Hyper, and Josh, first things first, Bitcoin has been going crazy. We almost hit 6K. We're up to, 5.5 right now, just shy of 5.6. It's really heated up here this last week.
That's right. After it broke right through that $5,000 mark, it just took off like a rocket. Almost hit that 6,000. Not quite. I think it peaked somewhere around like $5,850. But yeah, once it broke through that barrier, there was nothing stopping it.
Yeah, absolutely. And we've been talking about Bitcoin moving by itself, but we saw Litecoin actually take a little bit of a bump as well. We'll pull that up on GDAX here. It has leveled out maybe a little, but for Litecoin standards, breaking almost $70 per coin is pretty good for them historically, I think, right?
That's right. As they say, a rising tide lifts all boats, and that's kind of what Bitcoin is. Bitcoin's the biggest one out there. It kind of shot up and kind of helped every other coin out there out as far as increasing the price of it.
Mm-hmm. Absolutely. So today, that aside, we're going to hone in on one topic in particular, and that is the upcoming Bitcoin fork. And you may have heard this phrase tossed around because there was a Bitcoin fork not that long ago, and it spawned Bitcoin Cash, which is something that I think we've touched on in past episodes. But we're going to kind of break down that concept, and this next fork is going to be bringing us a new cryptocurrency called Bitcoin Gold. So, Josh, what is the right starting point here from an explanation standpoint in terms of understanding what a fork actually is?
Yeah, so a fork in Bitcoin, and it's different from cryptocurrency to cryptocurrency. Ethereum, for instance, actually also just went through a hard fork. But staying on the topic of Bitcoin, basically the miners in Bitcoin can vote to make upgrades to the Bitcoin protocol. And by doing this, they upgrade the code. And when they want to make a very drastic change, they go through something that's called a hard fork. And one of the good things and bad things are you get to make huge changes, I guess, to the Bitcoin protocol,
Mm-hmm.
but you also end up splitting basically the currency. It's almost like a stock split or something like that. Except if you were to split a stock, you would still have two shares of the same company. In Bitcoin's case, you have two different coins that will come out of this
Yeah.
that'll be a little bit different, and there'll be a chart on this website and everything that'll kind of highlight the differences
Yeah. So
that'll happen.
and we'll pull that up as we kind of move into Bitcoin Gold more specifically. But I guess, again, to keep a step backwards, the key thing with the fork and why it happens is because it's a democracy, and not every single miner on the network is going to vote to adopt these changes that everybody wants to when the fork happens. And when you have that split where some of the mining group says, well, we want these changes, and some of the mining group says we want to keep doing the same, the blockchain that they were all working on turns into two blockchains, and they just kind of share that commonality until the fork happens. So that's what causes it. It's not really a choice by one individual, but it's the result of that democracy not coming to a full agreement, right?
That's right. Yeah, and Bitcoin's been kind of as it's grown in popularity, different people have different ideas on how to kind of grow the technology and make improvements on it. So Bitcoin Cash was kind of a scaling evolution, tried to increase the amount of transactions that can actually happen. Because when you think about it, Bitcoin actually handles a very small amount of transactions compared to like credit cards and everything.
Right.
And in its current state, it couldn't support something like a Visa or MasterCard. They process so many transactions. So Bitcoin Cash was a step towards that direction to solve what they were calling what's known as the scalability problem in
Right.
Bitcoin right now. Bitcoin Gold is a little bit different. It's trying to make the algorithm different since in Bitcoin right now, the miners have a lot of control over the direction that the coin evolves,
Mm-hmm.
and I think we mentioned it. A lot of the mining goes on in China, so
Right.
a lot of the mining goes on in China. So it's kind of trying to take the power away from China to make the improvements and make it more decentralized.
Yeah, and it's a little bit of an oxymoron to think about Bitcoin not being decentralized because that's why it was created to break away from these centralized banks. And that is exactly what you just talked about. That criticism is what has fallen onto Bitcoin. If it started as that concept, but now that we have these really efficient ASIC processors, and now that there's been a lot of investment in China and they control so much of the mining share, it basically has become de facto centralized the way the system has worked out. And, it feels like a necessary stepping stone. Like something as complicated as a cryptocurrency, it's hard to map out the vision for Bitcoin out of the gate, not knowing where it's going to go 5 years into the future. And this is part of, I would say, the growing pains associated with that. Is that fair, Josh?
Yeah, no, that's definitely a good way to put it. It's going through, the evolution.
Yeah. So here we go. We're scrolling down now, Josh, and we've got this nice comparison chart. And I think this is a good talking point because it helps break down in relatively simple terms the differences between classic Bitcoin, Bitcoin Gold, which is coming up, Bitcoin Cash, which has already been created, and then the SegWit 2X. So maybe help us digest this, Josh. What are we looking at here? And for people that don't even know what SegWit means, what are we talking about in core differences between all these different versions of Bitcoin?
Okay, so SegWit is actually something that hasn't even happened yet. It's supposed to happen next month sometime, but it is, again, another hard fork. And the idea between SegWit 2X is to, again, try to solve the scaling problem that Bitcoin will face as more and more people adopt it and trying to use it for transactions every single day. Bitcoin Cash, you can kind of see the differences between that and Bitcoin. And Bitcoin Gold is the one that this website is focusing on. And you can see the supply for all these coins is roughly the same. Mm-hmm. The big difference in this Bitcoin Gold is the proof of work algorithm, where Bitcoin Gold, Bitcoin Cash, and SegWit 2X are all going to use the SHA-256 algorithm. Bitcoin Gold uses the Equihash, which is ASIC resistant, so that you can mine Bitcoin Gold with your GPUs, basically any video card or whatever that you have in your computer. You can use that to efficiently mine Bitcoin Gold instead of having to buy like a high priced miner.
Right.
That's basically the market's controlled by China.
And this is something that has overlap with Ethereum, right? Ethereum is GPU-based mining, and part of the mindset behind that is to make it more of a spread, so individuals with a couple of graphics cards can mine pretty comparably with a giant farm that has a lot of graphics cards. It scales more linearly. ASIC processors do not scale linearly. They are a really interesting piece of hardware that only does one thing, and it's run that Bitcoin algorithm. So that hardware does that one thing super, super, super efficiently compared to all the other processors that you could potentially use to mine Bitcoin. So that's what has allowed China to consolidate so much of the mining power, because if you accumulate a shitload of those really, really efficient processors, it's, orders of magnitude more mining power than what more regular grade consumers could even have a chance up against, right?
That's right. And in the beginning, I believe in the original Bitcoin white paper, there's an idea where there's one CPU, one vote in Bitcoin, kind of like one person, one vote whenever when you're voting for elections here in the US. This gives everybody a say, an equal say in the direction that Bitcoin is going to evolve in. And it's kind of gone away from that as these ASIC miners have evolved and just kind of taken over it's inefficient to mine on GPU right now. If you were to mine like Bitcoin, the efficiency of ASICs are just so high up that you would lose money mining on a video card right now, Bitcoin.
Yeah, absolutely. And some of it is a natural evolution, right? From a miner perspective, you want hardware that's more efficient, and over time, people can legitimize making more of an investment to innovate for this hardware, and it creates this kind of oscillating loop that goes back and forth, and over time, you have hardware that does this specific thing very well. So Again, it's sort of a necessary aspect of the bubble, I would say, and now we're seeing some of the dark side of the long-term repercussions. So, Josh, maybe let's take this more macro. What does this actually mean for Bitcoin? You know, let's say I'm somebody who watched episode 1. I put $500 into Bitcoin through Coinbase. What happens to me when this fork happens? Does that mean that I get Bitcoin Gold? Where is it supported? What do I do?
So you absolutely do. You are entitled to get a Bitcoin Gold. That's how hard forks work. If you have a Bitcoin at the time of the hard fork, then you will get this new Bitcoin Gold coin. Part of that little asterisk on that is you have to own your own wallet. You have to have the private key, as they would say, to the wallet. So I do not believe Coinbase hasn't released any statement on this fork coming next week. But going into the last hard fork, Coinbase said they were not going to support Bitcoin Cash. About a week and a half, I think, after the fork happened, they said that they will support it, but that isn't going to happen until January 2018. So if you have your Bitcoin on Coinbase, if you want to get this new Bitcoin Gold, you're going to have to move your Bitcoin off of that exchange and into a wallet where you control the private keys. And there'll be more directions. This website actually has a pretty good FAQ that kind of touches on all those, like what's the purpose of Bitcoin Gold? How do I get Bitcoin Gold? And what wallet should I keep my BTC in to make sure I receive my Bitcoin Gold? So they haven't released specifics on like supported wallets and all that good stuff, but they will be updating that information. So right now they recommend you just have a wallet where you have the private keys. And if you have the private key, then whatever software comes out, you can recover that wallet and retrieve your Bitcoin Gold.
And for the sake of clarity, if you have Bitcoin on Coinbase, you can retrieve your private key out of Coinbase and convert that into an offline wallet, right? That's totally possible.
You cannot actually.
You cannot.
You do not have access to your private keys on Coinbase.
So you have to send. So what you would do is send that balance to a new address that you do have the private keys for.
Correct.
So you'd have to make a new address.
What you would do.
Okay. All right. So there
you
go.
You have to make a new wallet, and you have to make sure the wallets you make, you can have access to their private keys. But yeah, as long as you have access to the private key is the key point.
So this is just a good, maybe a small digression here, but a good example of one of the kind of technical limitations of Bitcoin, where Coinbase does a good job of making it feel like sort of a traditional bank interface that you might be used to. But when it comes to stuff like this, that decentralized nature kicks in. You know, there is no turnkey way through Coinbase to just retrieve your Bitcoin Gold, at least not as of yet. We'll see. There's still 7 days, so maybe that'll become a possibility. But you know, you have to manually send it to yourself to a new wallet that you've created where you have the keys. Nothing that is beyond the scope of anyone listening to this, I'm quite sure, but just a good real life example here of why it's important to understand how your wallet is secured, where your keys are stored, how the fundamentals of this technology work before you make a sizable investment. Because who knows what Bitcoin Gold will be worth, but right now Bitcoin Cash is worth like 300 or 400 a coin, right, Josh? So this is worth something. You know, it's worth understanding how it works, because if this ends up being a new Bitcoin currency, you're sure as fuck going to want to be able to retrieve it. It's just value added for you as a Bitcoin holder.
It's true, and that's kind of what has also been driving up the price of Bitcoin. The fact that every person that owns Bitcoin will get one of these new coins that doesn't there's been no like valuation put on it because it doesn't exist. I think in some cases there are like futures market where people are whatever speculating on the price of it. I've heard like stuff like $100, like maybe a coin, but yeah, there is no official price because the thing doesn't exist yet.
Right.
But just like Bitcoin Cash, yeah, you basically got free whatever $300, $400 a coin, and it was even higher, I believe, in the first couple of weeks.
Yeah. So even if you were to just take it, say, I don't want to mess around with this, retrieve it, and then just sell it off and turn it into regular Bitcoin, you know, that could also be a possibility for you as well. So,
that's right.
All right. I think that's about it, though, Josh. That's a pretty basic overview of what happens with forks. Maybe worth mentioning that another one is going to be coming up in November, so this isn't even the end of it, and there could be more coming up after that. So it's an important thing to understand because it's probably a term you're going to hear again and again in the future.
That's right. We'll cover this one further actually when it does happen, and we'll see all the price action. Who knows what the price of it will actually be, but we'll be seeing it.
Yep. And one last note for those of you that have been keeping up with every episode, I want to show this website very quickly, esports.com, because this is a brand new ICO. Their white paper is very long, very detailed. We actually just stumbled on this site today, so we're going to be going through it, kind of reviewing it. We've got 2 weeks until the ICO starts. We do want to do a piece on Skincoin. We've got some contacts there, but haven't investigated fully. We want to do some due diligence before we report on it. So intrigued to hear about this, but for people on this channel, and at least with my expertise, Josh, keeping an eye on how esports and altcoins and ICOs and stuff can start to overlap, I think is very interesting. So a thread that we are very likely to follow up on in the future.
Yeah, sounds good.
All right, man. Very good. Thanks for watching, folks. You can find these on the Moonduck YouTube channel. We'll be back next week with more updates on cryptocurrencies.